How do I know if mortgage rates are going up or going down? Well, it's simple. You pay attention to the 10-year Treasury notes. That is a big deal because these two act the same. If you've got a Treasury bond and the rates go down, mortgage rates are going to follow. That's very important to remember. The 10-year Treasury rate goes down, mortgage rates are going to go down as well. Currently, it sits at about 4.6 or 4.7. Now, if we see that number stick in this area or go up, we're going to see mortgage rates follow it right up. We do not want to see that. Now, why do they issue Treasury bonds? The government issues those Treasury bonds when they need money, plain and simple. When they need money, they want to offer up incentive for major investors to give them money on a promissory note. So if they say, hey, we need money, we're going to offer up 5.5% on a U.S. Treasury bond. Well, that is a very safe investment. And to know you're going to get 5.5 makes it really incentivizing to go buy it. There's a lot of investors that are going to pay that. And so more people pay it, which gives the government the money they need to continue to operate. So when you're in a bad economic situation, they drive this up so the government can get more money, which does what? It increases the rate that we pay for our mortgages. It doesn't seem too fair, but that's what happens. Now, if this goes down, let's say this goes down to 3.5, which it was down below that back in 2022. But if it goes down to 3.5, mortgage rates are going to go down. Now, they go down for a different reason. They go down here because the U.S. has money. They don't need to incentivize investors to give them more money. This isn't a great investment at 3.5%. So they take their money and they flip it over to the stock market. So investors now start buying mortgage-backed securities. Well, the more mortgage-backed securities they buy, it gives those mortgage companies an opportunity to give you a better rate. So that's why we see mortgage rates following the same line as the Treasury bonds. They don't do it for the same reasons, but they do it together. So they go up together and they go down together. So make sure you pay attention to that 10-year Treasury note rate, and that's going to tell you what's going to happen to the mortgage rates.